Welcome back to the Quarterly Call. All content discussed here is for informational purposes and is not investment advice. Please consult with a qualified professional before making any investment decisions. You sent us some really interesting stuff, actually, on Uber's latest performance. Their Q3 2024 earnings call Transcript A&D, the press release. So we're going to dive deep and see what we can uncover, what's driving their success, what's on the horizon.
It's a fascinating snapshot, isn't it? Uber's impact, it goes way beyond, just getting a ride or delivering our takeout.
Hmm.
I think what they're doing gives us clues about the gig economy as a whole, how transportation is changing, and even what the future holds with things like self-driving cars.
Okay, so first things first. Uber is having a quarter. Seriously, like record-breaking. Their press release highlights 20% year-on-year growth in gross bookings, and they've managed to do that for 4 quarters in a row now. That's got to get investors excited, right?
Absolutely. And what really makes this impressive is they hit a GAAP operating profit of over $1 billion. Now, I know that sounds like financial jargon, but what it means is they're making a real solid profit after all their expenses. That's a huge GE achievement for any company, especially one that's been investing so heavily in growth like Uber.
So it's not just growth for growth's sake. They're figuring out how to make it profitable, too. What I found interesting in the earnings call was how the CFO emphasized that this performance is driven by both attracting new users, A&D, getting existing users to come back more often. So it's not a one-time thing. People are really integrating Uber into their lives.
Exactly. And think about the scale of what they're doing. Over 7.8 million people are out there driving, delivering, or shopping through Uber. They earned a combined $18 billion this quarter alone. That's mind-blowing. It really makes you think about the future of work, doesn't it?
Right. That's more than the entire economy of some countries. And it's not just individual gigs. We're talking about a whole ecosystem here. Uber One. Their membership program now has over 25 million members. That's a 70% jump from last year. People aren't just trying Uber. They're buying into the whole concept.
What's fascinating to me about that membership jump is it signals a shift. Instead of single transactions, you've got recurring revenue. People are becoming loyal to Uber, not just convenient for them in the moment. And that's a strong indicator of potential for growth down the line.
It's all about building that relationship, isn't it? And it makes sense with how Uber is expanding beyond just rides. Their new product lineup, stuff like grocery delivery and other services, is bringing in a massive $20 billion in annualized gross bookings. Plus, they're smart about where they're going, moving beyond the packed city centers and into those less dense suburban and secondary markets.
That's a really savvy move. There's a huge untapped market in those less populated areas. Think of all the people who haven't had reliable on-demand services before. It's a smart way for Uber to leverage their technology and infrastructure to reach those new customers.
But I imagine there are challenges too, right? Building out a network in those areas, making sure there are enough drivers, keeping the quality up. It's got to be tricky.
You're spot on. There are definitely logistical hurdles. But in the earnings call, Uber's CEO, Dara Khosrowshahi, actually addressed this head-on. They're focusing on, first, improving the selection of services in those less dense areas, and then working on getting enough drivers and riders to create a sustainable system. They're basically applying what they learned from expanding their delivery service into those areas and using it for their ride-hailing as well.
It's like a snowball effect, right?
Right.
The more drivers or users they get, the better the service becomes, which attracts even more people. It's a classic network effect strategy.
Exactly. Now, shifting gears a bit, one thing that really caught my eye in these materials is Uber's ambitions in the world of autonomous vehicles. They've got 14 partnerships with self-driving companies, including an expansion of their deal with Waymo. That's the self-driving unit of Google's parent company, Alphabet.
Yeah, and they're not just talking about it. They're actually bringing robotaxis to Austin and Atlanta in early 2025, exclusively through the Uber app. It's a bold move, and it could really shake up the entire transportation industry.
Absolutely. Imagine the possibilities. This could change the way we commute, travel, even get our deliveries. It's not just about replacing human drivers. It's about making transportation more accessible, potentially safer,
Yeah.
and more efficient. What I find fascinating is they're not trying to do it all themselves. They're partnering with the leading companies in the field. It's a smart way to leverage existing expertise and speed up the rollout of this technology.
They're playing to their strengths. Uber brings the demand, the platform, the massive customer base, and their partners bring the cutting-edge self-driving tech. It's a win-win, and it could reshape the future of transportation.
And they're really thinking about how to make this work long term. In the earnings call, they talked about how they'll even be handling fleet management for their self-driving partners. Think cleaning, repairs, depot operations. They're becoming the one-stop shop for autonomous vehicles. It's a really interesting evolution of their business model.
So they're going all in on this technology. But can they really overcome the hurdles? The regulatory stuff, public perception, the impact on drivers. These are big questions.
They are huge questions. And how will this impact those millions of drivers who rely on Uber for income? This shift to self-driving cars, it raises a lot of social and economic issues that need careful consideration. It's definitely a space to watch closely.
And while Uber is clearly focused on the future, they're not neglecting the present. They've achieved investment-grade credit ratings, which basically means they're seen as financially stable and reliable.
That's a big deal. It shows they've grown up, so to speak. Achieving this rating means they can get better loan terms, which is great for investing in future projects. But it also means they can focus on giving back to their shareholders, things like stock buybacks, which can boost the value of their stock. It's a balancing act. But it demonstrates a commitment to both short-term and long-term value.
And their CFO was pretty clear about that in the call. They're aiming for a durable share count reduction in 2025, which is basically a fancy way of saying they're trying to increase the value of each share of their stock. It's a good sign for investors.
Absolutely. And they're not just sitting on their laurels. One thing that really jumped out at me from their investor report is they estimate 45% of the U.S. population still lives in areas without reliable on-demand service.
Wow, that's a massive untapped market. It seems like Uber is in a really strong position. Record-breaking profits, a growing membership base, innovative new products, and a bold vision for the future. But it makes you wonder, are they spreading themselves too thin? Can they really be a leader in all these different areas, from ride-hailing to grocery delivery to self-driving cars?
That's the million-dollar question. With all this expansion, are they overlooking potential challenges? Are there risks they're not seeing? These are all things we need to consider as we continue our deep dive into Uber's performance.
Well, I'm definitely intrigued to find out more. Stay tuned, because next we're going to take a closer look at Uber's expansion strategies, both geographically and into new areas. Can they truly become the dominant player in this ever-evolving world of on-demand services? We'll be right back after a quick word from our sponsors.
I'm excited to dig deeper, especially into those implications of their autonomous vehicle push. It's a game changer, with the potential to disrupt not only Uber's business, but the entire transportation landscape.
It's going to be fascinating. Don't go anywhere. We'll be back in a flash.
So you're saying Uber is pushing beyond those, like familiar bustling city centers?
Exactly. They're really targeting those less dense suburban and secondary markets, both here in the U.S. and internationally, in their prepared remarks. They even address the misconception that, everyone's already using Uber, which isn't true. They estimate that 45% of the U.S. population lives in areas without reliable on-demand service. That's a lot of potential customers.
That IS is a huge market. But it makes you wonder, can they actually make it work in those less dense areas? Those are very different operating environments.
Well, they seem to think so. They pointed to their experiences in the UK and France, where trips outside of major cities like London and Paris are actually growing 3 to 4 times faster than in the cities themselves.
Interesting. It sounds like they must be adapting their approach to fit those different needs. What are they doing differently?
It looks like a multi-pronged strategy, for one. They're really focused on improving the technology behind their marketplace, especially when it comes to, pricing models for longer pickup distances and things like that.
That makes a lot of sense. Pricing is key for both riders and drivers, especially when trips might be longer and less frequent.
Right. And they're also realizing that riders in those less dense areas might be more willing to plan ahead or wait a bit longer for a ride. So they're pushing things like reserve, wait and save, and UberX Priority to offer more reliability. They even pointed out that their experience expanding Uber Eats into these areas has been really encouraging, and they're hoping to replicate that success with their ride services.
It's smart to leverage their existing infrastructure and knowledge. I'm also curious to hear more about their autonomous vehicle strategy. How are those efforts coming along?
They're definitely going full speed ahead on that front. They've got those 14 partnerships with various self-driving companies. And remember those robo-taxis coming to Austin and Atlanta in early 2025? They're going to be exclusively available through the Uber app. They're really positioning themselves at the forefront of this technology.
It's a bold move for sure. But what are the biggest challenges they're facing with autonomous vehicles?
Well, in the earnings call, they talked a lot about the importance of liquidity, making sure there are enough self-driving vehicles in a city to meet demand and provide efficient service. They're also putting a lot of effort into mapping and infrastructure to support those vehicles.
Right, you can't just have the technology, you need a whole ecosystem to support it.
Exactly. And it's not just about the tech itself. They're going to have to overcome public perception issues and navigate a whole web of regulations. And then there's the impact on their relationship with drivers. They're trying to emphasize their role in fleet management for these autonomous vehicles. Things like kinning, cleaning, repairs,
Oh.
and depot operations.
That's fascinating. So they're evolving from connecting riders with individual drivers to becoming facilitators for entire fleets of autonomous vehicles. It's a whole new ballgame.
And it raises a lot of questions about the future of gig work and how Uber plans to support their drivers during this transition. But for now, let's switch gears back to Uber's efforts to attract new customer segments. They're making a big push to get teenagers on board. Their teen accounts are now available in most major markets.
That's smart. Teenagers are a prime demographic for on-demand services. What's their strategy there?
Well, they reported that trips from teen accounts are already up, over 40% from the previous quarter. So it seems to be working. And they're adding features, specifically for teens and their parents, like Guardian Booking, which allows parents to book rides for their kids.
That addresses a big concern for parents, safety and peace of mind.
Right. And they're making Uber One benefits shareable between parents and teenagers, too. So it's win-win for families. But they're not just focusing on teens. On the delivery side, they're continuing to expand beyond just restaurant meals. Their grocery and retail segment is growing like crazy.
That makes sense. People want that same convenience for all kinds of shopping.
Exactly. They're leveraging their huge network of drivers and couriers to deliver those orders quickly. And they're constantly adding new merchants. They mentioned partnerships with Spirit Halloween and H Mart in North America, and even launched 24-hour online grocery delivery with a supermarket chain in the UK.
Expanding their selection is key to keeping customers engaged and attracting new ones.
And to make grocery shopping even more appealing, they're introducing features like Uber Eats lists, where you can get curated recommendations from friends and local foodies. They're trying to personalize the experience. Speaking of personalization, we have to talk about their Uber One membership program. It's now got over 25 million members globally, a 70% increase from just last year.
Wow. That's incredible growth, especially when you consider how much competition there is out there for membership programs.
What's interesting is that they're really focusing on promoting the program to specific groups. They mentioned doing a back-to-school campus tour to promote Uber One for students, and expanding the program to Canada, with plans to launch in even more countries this year.
That's clever. Targeting those key demographics is a smart move, but ultimately, it's about the value proposition, right? What are they offering that's attracting so many members?
Well, they're hitting all the right notes. Discounts on rides, free delivery on eligible orders, and other perks. And it's clearly working. Because they said that members spend over 3 times what non-members spend each month. It's driving engagement and loyalty like crazy. It seems like Uber One is becoming a core part of their growth strategy.
It's clear they're not putting all their eggs in one basket, though. What about their advertising business? They've been making some moves there, right?
Absolutely. Their advertising revenue grew nearly 80% year over year, which is pretty impressive. They're really focused on improving their ad tech capabilities, introducing new ad formats, and giving advertisers better tools to measure their results.
Those are the building blocks of any successful advertising platform.
Right. They even mentioned piloting a new ad format called First Impression. That basically lets advertisers take over the home feed for a short period of time, and they're rolling out new features, specifically for consumer packaged goods advertisers, like sales reporting and category position estimates.
So they're trying to attract those big brands by giving them the data and insights they need. It seems like they're thinking outside the box, too, even using their mobility business for advertising. They partnered with T-Mobile Advertising Solutions to bring their Journey TV offering to over 50,000 vehicles across the U.S.
So those tablets in the back of Ubers, now they're showing targeted ads to riders. It's just another way. They're finding creative ways to monetize their existing infrastructure and expand their revenue streams.
It's impressive. It really seems like Uber is firing on all cylinders. They're growing their core business, expanding into new markets and services, and building a solid foundation for the future with their autonomous vehicle and advertising initiatives. But as with any company that's growing this fast, there are bound to be challenges and risks along the way.
You're absolutely right. It makes you wonder, can they maintain this incredible momentum while navigating all the complexities of New technologies, regulations,
Yeah.
and competitive pressures.
And with all these ambitious expansion plans, is there a risk of them spreading themselves too thin or losing focus on their core strengths? These are important questions to consider.
They are. And we'll delve into those questions even further as we wrap up our deep dive into Uber's Q3 2024 performance. What does it all mean for the company's future? We'll be right back after a quick break. Welcome back to the Quarterly Call. As we wrap up our look at Uber's Q3 2024 performance, one thing that really stands out to me is how much they've matured as a company.
Absolutely. It's not just about the record profits. It's the overall sense of stability they've achieved. And that's really highlighted by their investment-grade credit rating. That's not just a financial term. It shows they've transitioned from a company known for rapid growth and spending to one focused on long-term, sustainable profitability.
Look like they've leveled up in the financial world, right?
Right.
It gives them access to better loan terms,
Yeah.
which can help fuel future growth. But what I find even more interesting is how they're talking about capital allocation.
It's a sign of their priorities. In the earnings call, their CFO was very clear. Invest responsibly in future growth and return capital to shareholders. They're aiming for that durable share count reduction in 2025, which basically means they're focused on increasing the value of each share of their stock.
So they're thinking about both the long game A&D, keeping their investors happy. It's a delicate balance, but. When we step back and look at the big picture, Uber's success isn't just about rides and deliveries anymore. It's a reflection of larger trends, like the rise of the gig economy and how work is changing.
You're hitting on a crucial point. Millions of people worldwide rely on Uber's platform to earn a living, and their push into autonomous vehicles. That has the potential to reshape not just the transportation industry, but also the labor market. It's a complex and rapidly evolving landscape, and Uber's right in the middle of it.
So what does all this mean for our listener today? Why should they care about Uber's quarterly performance?
Because it's a window into the future. We're witnessing a massive shift in how we live, work, and move. Uber's journey, their successes, their challenges, give us valuable insights into what lies ahead.
It's a reminder that we need to be adaptable, embrace innovation, and always think ahead. And we can't forget the human side of it all. As technology advances, we need to carefully consider the social and economic impact.
Now, before we wrap up, I'd like to leave you, our listener, with a thought-provoking question. Uber's making huge investments in expansion, new markets, new product categories. They're also going all in on autonomous vehicles. Can they manage it all?
Ooh, I like that. Can they handle this rapid growth without losing their focus? Can they stay ahead of the curve and maintain that competitive edge? Only time will tell. But it's definitely something to ponder. Thank you so much for listening to the Quarterly Call. If you enjoyed it, make sure to rate and follow our show. Until next time, stay curious and stay informed.